Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello MJ friends, hope you had a good week out there. So we'll go through the Canadian MJ sector here. We'll do the US MJ sector in a different video. So CGC still struggling. At this point, the S&P 500 has seen a couple days of bounce follow through, so the sky is no longer falling, at least at this point in time. Pretty impressive bounce overall. Not a ton of correlation with the MJ sector, a little bit, but nothing significant. Looking at CGC, the daily exponential resistance remains as resistance. And I'm still considering anything under 36.31 as a daily lower high. If the bulls can get over these daily exponential resistances, I'll start paying attention more. But as long as they are resistance, I'm not really paying much attention to CGC. Fairly weak bounce at this point, the weekly time frame, just trying to get a bounce going. We've seen a weekly lower high on CGC at this point. We're looking at 8 weeks in a row. So 2 months with every single week being a lower high. That's a little pattern that the bulls are going to have to break for a short-term bounce, but keeping in mind any bounce on CGC weekly time frame, we're just going to be looking for a lower high. So if you want to be an ultra-conservative bull and ensure that there is some momentum back in the sector, you're waiting for weekly trend changes. Only a handful of names have changed those weekly trends, most notably C-Web on the US side. Not many Canadian MJ names have, so that would require a lot of patience. And that may be a better risk to reward scenario depending on what you're looking for. So we'll keep an eye on those daily exponential resistances into next week. Cron is continuing to pull back. Again, the most notable thing in this sector for me in the last 3 to 4 months is the lack of follow through. We've had plenty of big bull moves and they've given great opportunity where we can still be looking bullish playing in this downtrend. And just an example for Cron here, to go from 1391 up to 1569, I mean, there's a 12% move right there over less than 2 weeks, and then into the earnings reaction, a 22% move. So there's definitely opportunity in both directions, but the hallmark of the sector is that the bull moves are short-lived and they do not see follow-through. And we're about to look at Cron, ACB, and APHA, all bulls. All of those names, I should say, had big bull moves and no follow-through, and still no daily trend change for 4 months at this point on these names. So for Cron, anything under 1569 was a lower high. We topped out under that level. We pulled back very significantly, and 1270 is the only support level nearby. The bulls would have to hold 1270 and break 1558 to see a daily trend change and to shift momentum. At this point, with where we stand, we are $2.22 below resistance, and we are about 66 cents above support. And as far as the hourly time frame goes, bears have been in control. Weak bounces, cooling off RSI, but keeping the bears in the driver's seat. I do expect 1270 to hold more likely than not on the initial attempt. I may be interested in a play off of that level if we were to drop down to it on Monday, but otherwise just patiently waiting. And again, the bears are entering every single bull move. APHA is another example. So a significant bull move on earnings, little bit of follow through. Okay, now we top out. Just need a daily higher low and higher high. Change that trend, show sustained buying, put continued pressure on shorts, and it's just not happening. At this point, we closed at the low of the week, at the low of consolidation, and we've pulled back 17% from that high. So as long as we're pulling back double digits from the top of these moves, there is no incentive for bulls to hold through these big bull moves, and there's every incentive for bears to jump on those big bull moves and ride the price back down again. So if we see a bear break of 630, we're then going to be looking down at no support. The gap fills all the way down at 541. At this point, we're certainly expecting a higher low to form compared to, it's actually 502 is the low. So I'm looking for a higher low compared to 502. There's no indication that that's forming yet, and even when that is found, if the bulls were going to see continuation from where we stand, we would need over 20%. So we will be looking for a daily higher low to be found eventually, a bounce for a lower high, and a tightening range pretty much through August is what I would anticipate on APHA, pending any kind of major news. Hourly RSI is on the verge of oversold. You can see every time we just touch that oversold level, we have seen short-term bounces. So if we see weakness Monday first thing, we'll be watching for a potential playoff of $6 psychological support. ACB pulled back not as significantly, but again, the pullback from the top. If we're talking in percentages, we pulled back 12%. That's great opportunity for bears. That's a lack of incentive for bulls to hold anything into bull moves. So we're going to be looking for the gap fill at 626. We bounced off 637 at this point, have to change the hourly trend for the bulls to indicate that our daily higher low has been established. If the bulls can break 655 on Monday, that would be notable, and we would then have our low, high of the bounce, higher low, and we would be looking for a lower high compared to 720. TLRY tried to get that bull break. Again, just no follow through. We broke resistance of 44.44 and we topped out at 44.65. So we only broke it by 21 cents and closed near the low of the day. Certainly not convincing. And at this point, the weekly time frame trying to prove that the higher low has been set. No follow through this week from the bullish reversal candlestick of last week. And again, just not a whole lot of confidence. Earnings upcoming for TLRY are going to dictate either the weekly higher low has been set and we're looking back to 51, or it has not and we're looking back at that low of 34.25 if it's a bearish reaction. OGI still not doing anything. Pretty much the least notable week for OGI probably in many months where just nothing happened. So bulls aren't proving anything. Bears are just riding the trend that they are continuing to hold on to. 606, anything under that's a lower high. Support is down at 545 and 540. And if those levels break, we'll be looking at further consolidation. Hexo. So Hexo now starting to prove itself a little bit. It's been a slow moving game, but at least we haven't lost the little daily higher low stair steps. So we had a higher low at 394, 412, 426, and now even another one here before the bulls showed up on Friday, 435, and decreasing the odds that it's a bear flag at this point as the bounce has gotten a little follow through. And from the low, because it's such a low cap name here, 27% bounce. So that's a good sign. Getting over the daily exponential resistances. Now the question is, can we see a bull cross of those exponential moving averages? Resistance is 5 and 515, and a slow and steady move, finally getting some follow through. So that's one good sign for bulls out there in the space with limited good signs for the bulls. CTST, so what in the world happened here? There's certainly some theories. There's really two theories as to what was going on. First things first, let's talk about the anatomy of a short squeeze, because the most important factor for a short squeeze to take place, in my opinion, is number one, a prevailing downtrend, which lets you know there's a lot of shorts in positions, and then a fast bull move out of nowhere. And the most important factor is timing. It can't be a slow bull move. It has to happen very fast, because what happens is the shorts literally have no chance to cover. So we see a move to 230 here. This is the 2-minute time frame, and you can see no consolidation from 230 all the way up to 284. So that's a 20% move with literally no opportunity. A 20% move in less than an hour with no opportunity for bears to cover. And anytime a bear is covering a short, they're having to do so at the ask. So it's just a complete, imagine a run on a bank where everybody runs to a bank and withdraws their money at the same time. This is pretty much the opposite, where everybody is running in and buying on the ask at the same time. So if you're putting a limit order in, you're not going to get filled and it's going to get skipped. So if I'm short and I want to cover, I have to buy at that ask. And of course, any bulls that are trying to get in on a bounce or a bull move are having to buy at the ask as well. So when there's literally no selling going on into the bid, and even here, the first period of consolidation that we saw after that little 20% spike, we pulled back and we didn't really even lose the higher low pattern. We had a higher low on the candlesticks here for 10 plus minutes in a row, 269, 268, 269, off we go, continuation. So just absolute mayhem for the bears. Big upper wick, volume climax, signal the top, and then we pulled back a bit into extended hours. So what in the world happened? Short squeeze, number one, we know that. So why did a short squeeze happen? Well, one theory is ETF rebalancing. So one theory is that the bots are running these ETFs, which is absolutely true in the sense that they're managing position sizes and doing some buying and selling and balancing and all that. And the speculation is that the bots don't know the fundamental of what's going on with TGOD. That would certainly be up to the ETF's managers or whoever is in charge of that to make sure to adjust. It's a big mistake if that's what happened. Someone made a big mistake to allow an ETF to buy this much of a company because its price point was so low or because its holding size in the ETF was too small. Whatever the reason, those bots could have been buying at the ask and then, of course, squeezing shorts, and then just a snowball effect as to what went on. Number two theory is that shorts were covering, anticipating either a loss of license, a delisting from the New York Stock Exchange, and if that happens and you're holding short positions, then you potentially might not be able to cover those short positions on a lower exchange. I do believe that it would eventually transfer. Essentially, the theory is that shorts wanted to get out before having to deal with that mess, or essentially potentially being locked into a position for an unknown period of time while shares settle and while we do move down to the OTC if that were to happen. So take your pick as to what you feel is most likely. All that matters is the bulls made a significant move, and we will likely see some further downside on Monday, although we already did pull back so significantly. I mean, from that high to where we closed after hours, we dropped 26%. So one thing we know is there's going to be significant volatility on Monday. So if you're comfortable with technical analysis, you can certainly be looking in either direction and know that there's going to be opportunity on Monday. Short-term support will be 260. If that breaks, we're going to be looking back down at some resistance levels around 230. Previous resistance, now support. And as far as resistance goes, 286 and 294 and $3 are levels that stand out. And we did end after hours with a bit of an equilibrium, so we'll see where we open pre-market. The VFF is just absolute raging bull. And again, in a sector that has just been struggling and bull moves get sold into, and we do not see daily trend changes, this is very notable to backtest and hold these exponential moving averages multiple times and then continue this breakout. And at this point, off of the low, we are up 52%. That is huge. 1386 is the next resistance level. Certainly no entries at this point, as the daily RSI went from oversold to overbought. And the last time we were at this RSI was in the blue sky breakout run. So it did get overextended in that scenario when RSI is a lot less meaningful. But certainly notable that the RSI is back over 70 on the daily. The 4-hour RSI is in the upper 70s, and the hourly RSI is over the 70s as well. So I wouldn't want to be entering bullish at this point, but there's also no reason to exit if you are a bull. Anything above 1268 is an hourly high or low, keeping the bulls in full control. Little bit of a double top at 1360 and 1361. So bulls would want to break that level first thing Monday. If we don't, we're looking back down at 13 and 1268. Another name with a ton of volatility on Friday. I would anticipate some good volatility on Monday as well. If we lose the hourly uptrend, which I don't anticipate we will, on initial consolidation, if we reject on Monday from 1361, I would anticipate that the most likely scenario is we pull back, we hold 1268, see the hourly chart tighten a little bit, and then break bearish from there if we are going to see daily consolidation. So if we were to lose the hourly uptrend, we zoom out to the daily, and anything above 1141 is a daily higher low. Again, weekly time frame, so much space for the bulls to hold a higher low at this point. It's very notable compared to a weak sector. TGOD, nice dip buying here, so that's a good sign. Again, after a bull move, we have to see bulls buying dips quickly and sustained buying. Bull cross of the exponential moving averages for the first time in a long time, and looking for a bull flag here. Support is 327, resistance is 351, and the hourly trend changed with a higher low and higher high, indicating that our daily higher low may already be established. If that's the case, that is a bull flag, and we're going to be looking up at 351. Again, bullish momentum being fueled by the fact that they applied for an uplisting, and the weekly time frame, solid two-week bounce underway. Labs explosion. So this is an example, and again, I'm not saying look at me, I was right. I'm saying look at what technical analysis can do for us. So I know nothing about any news behind this move. Maybe there is news behind this move, but I haven't been paying attention. I'm not trading labs. I don't like the liquidity on the US OTC ticker. I don't think I've ever traded it before, and if I did, it was maybe only once. But that's just a scenario where I wasn't playing this move. Some TheChartGuys members definitely were, but it's certainly not a group kind of thing. So it's not like we're running the price up at TheChartGuys. The bottom line is the pattern was a very tight pattern, shifting momentum in a sector where individual names had started to shift momentum, So in the video 1 week ago from today, I was able to say, keep an eye on labs this week just because of this chart setup and knowing that a break is imminent. And if other names had recently broken bullish as they had, we could be watching for a bull break. And obviously I could never say, look for a 30% move or whatever this move is to the upside, about 30%. And if I were that confident that a 30% move were coming, I definitely would have played this name. But the bottom line is, I'm not predicting what's going to happen, but I know to be watching a tight range and know to be watching for signals that that tight range is breaking and that a volume and volatility spike is coming, and that means an opportunity spike is coming. So that's just an example of seeing tight patterns like this. Perhaps it was, recognition in the library of my subconscious of how many times I've seen a chart look like that. I don't know, but all I know is it stood out to me, and when you get comfortable enough with charts, patterns stand out to you, and patterns stand out to you and tell you to stay away from a certain setup. It's not worth your time and effort, and patterns tell you when to start paying attention. So from here, after this huge bull move, congrats to the bulls, number one. All-time highs right there, 793 or 739. Just like that, all-time highs are in play, and the move off the low at this point, 79%. So labs and VFF standing out in a big way on the MJ side of things, and look at this weekly chart. Just, we're done, consolidating, right back to the all-time high, monthly chart. Key test, though, if we reject from here, bulls ideally want to just get that new all-time high, because if we reject from 739, that leaves the opportunity for a double top. We would certainly still be looking for a daily high or low, but it's just psychologically. If bulls are going to be extremely confident, breaking that level early this coming week would be beneficial to the bulls to stay confident, because if that double top is looming, then some bulls are going to say, well, we're up 30% in a few days, I'm going to take some profit off the table, and that may lead to a bigger pullback, and from there we would have to be watching for a potential cup and handle. We'll take it one day at a time, but hourly high or low to keep the bulls in control has not been set in multiple days. So next consolidation, we will see an hourly high or low form, and we'll see if it requires that before an all-time high test. VGW, decent little bounce, but again, just a daily downtrend. I would say anything under 397, so we'll round that to 4. Anything under 4 is unimpressive, but the bulls, to change the daily trend, are going to try. Let's see, if we reject from 4 early this week, we need a daily high or low and then a break of the trend, or change of the trend. And perhaps the fact that labs in the same subsector is breaking out significantly can help VGW see some bullish volume as traders potentially look for a laggard play. Oils also breaking out. So clearly, the subsector of extractors doing really well. And we're up how much off the bottom? A lot. 60%. So again, you compare to MJ licensed producers, and you compare it to the subsector here of extractors, it's night and day difference over the last month of trading as far as gains and losses. So from here, the weekly time frame, very significant bounce, bull cross of the exponential moving averages. It's all about 83. Just looking at this chart, I would expect a lower high to form compared to 83 and a bit of a weekly tightening range to form from there. The daily time frame is obviously a bit extended. Resistance will be 62, followed by 63, and then 72. And the daily uptrend remains intact as long as 48 holds. The hourly uptrend remains intact as long as 55 holds. If we lose the hourly uptrend, we then zoom out and look for a daily high or low to form. NEPT is not feeling the love of extractors, and this is a scenario where we've pulled back a lot harder than I would anticipate. Again, it just falls into the category of zero follow-through, zero sustained buying pressure. There's your bull move. There's bulls exiting on that move. There's bears jumping in, and no follow-through. The fact that we gave it back is definitely notable. 471 is key support, which is approaching, and it's just little lower high after lower high. Looking at this move on the 4-hour time frame, bulls just not able to get any momentum. Here it is on the hourly, and let's see if we ever even confirmed. I don't think we ever confirmed an hourly trend change here. We had plenty of big bounces, 5%, 7% bounces, but just no hourly higher low and higher high. So that will still be needed if we're going to see that 471 support hold. Anything under 493 is just an hourly lower high. NRTH, bull break, but a big upper wick. Lack of follow through is definitely concerning. Bulls wanted to close over 89 and have less of an upper wick. The hourly time frame, still an uptrend, but more of an equilibrium setup as opposed to a continuation move. If the bulls can hold 85 on Monday, we'll look for a bounce and a lower high compared to 92. If we can't hold 85, that's a red flag on the daily time frame because of how much we have pulled back after breaking the highest price we've seen in the last 6 weeks or so. And last, KHRN, again, not a Canadian MJ play, but this is where it's going to live. And we've got the... Actually, it's not an inverse head and shoulders because this level didn't drop lower. The head is not below the shoulders. So it's a standard old equilibrium. 173 support, 238 resistance, higher low at 187, lower high at 229. Here we go again. This is one to be watching this coming week. Probably towards the end of the week, I would anticipate a higher low to form compared to 187. And we could stay in this range. Let's say if we form a higher low either Monday or Tuesday, we could then bounce into the end of the week. And we could stay in this tightening range all next week. Bottom line is, as it continues to tighten, keep an eye out because if we get a bull break from this tightening range, it'll be the first time we get the exponential bull cross since the all-time high. And looking at the monthly time frame, like so many names, we're looking for a higher low to form. Keep an eye out for the shift on KHRN, but anticipating at least a few more days of a tightening range. That's where we stand in the sector. Some names standing out, almost little one-by-one individual names running. Earnings are going to be continuing through the next couple of weeks. Definitely need to be paying attention to those. And we'll see if the major names like ACB, APHA, CGC got to change that daily trend. It's been 4 months at this point without any fake out. Just clear downtrend. Thanks again. We'll see you soon. Have a good day. Do a good thing.
Hey guys, could you not do that to my plants, please? Hey guys.